What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about the three most OP indicators that I use. A lot of people wanted to know the settings, so I'm going to break it down for you, show you these indicators, and also show the settings. Now, these indicators you can use for swing trades and for day trades. I use them a lot because I like to day trade. I'm pretty much quick in and out of day trades, scalps to intraday swings. Okay, and then I do put on some swing trades at times, and you can kind of read the swing trades based on these indicators as well. So let's get right into it. I don't like those videos that talk and don't get to it. So there's three indicators I use. Top three, I use the EMA. So the 9, the 20, 50, 100, 200. If you're in my Discord, you can get these scripts. I created this EMA by myself. Okay, so I created this script by myself. It also includes VWAP on there. So this is one that is going to be kind of hard to show you the settings just because this is a self-created script, but I created the 9, 20, the 50, 100, and 200. Okay, and then there's also VWAP included on here as well. Okay, so not really too much settings I can show you there, but just know I use the 9, 20, 50, 100, and 200. All right, and then the second indicator that I use is the Saudi ATR. So Saudi Mahajan is a trader, a really good trader, an engineer, and he's also a script creator. So he creates scripts here on TradingView. So again, I use TradingView to trade, and these indicators are used on TradingView. You can find them on a couple other applications or charting platforms as well. All right. So Saudi ATR, what is an ATR? It's an average true range. We can show the settings here. So all you have to do is literally just go to the indicators here, and then just type in Saudi ATR. And then just click on Saudi ATR levels by Saudi Mahajan. Okay, and it's an ATR, an average true range, that incorporates pretty much the Fibonacci sequence, Fibonacci sequence, Fibonacci levels in its algorithm. Okay, to create these levels. And why is that important? Because a lot of things in life move based on this Fibonacci sequence. And especially in trading, you'll see Fibonacci numbers like, the Fib retrace, all that good stuff we talked about. You'll see those hit a lot. So how do you use it? And what are the settings? So let's go to the settings. I download it. And the only thing that I change in terms of input is it starts off with a show info label. And this tells you where like calls would be good, where puts would be good, the blue line, the yellow line. And then it tells you like the range, okay? But I take this label off. I don't like the label. That's the only thing I do differently. And then when you're day trading, you use the day setting, which gives you the range that the stock should move for the day. And you could look at it on the 5-minute time frame. You'll have to be looking on the like 5-minute, 3-minute, 1-minute time frame. So it kind of gives you the range that the stock can move in for the day. Yellow line, if we get below the yellow line, it's going to be sells. Sells would work here. Above the blue line, longs would work here. And then in the middle, between the blue and the yellow, is the trigger zone. The gray line is the close of the previous day. Okay, and that's when we're using the day setting to day trade. Now, if you use the multi-day setting, notice how the ranges become larger. Let me scrunch this down. The ranges become larger because now the multi-day setting shows you the expected moves that the stock should travel for the week. Okay, and that you would look on a larger time frame like the 2-hour or the daily time frame or the hour time frame. So larger time frames, but it shows you the distance that the stock should travel during the week. Again, below the yellow is highly likely for puts. Above the blue, highly likely for calls. The gray is going to be the close of the previous week in this case, since we're looking at the multi-day setting. Okay. Now the swing is for swing trades, so like swing positions. So how far is the stock expected to move for the month? And then also when we get into these zones like the blue, if we get into the blue and we go long, the maximum expected move is this dark gray line here, the dark gray line. Okay, the 50% expected maximum expected move is that middle gray line. Okay, and then et cetera in between. You could guess what those percentages are, obviously, but this is really good. This is really good stuff. These lines typically act as support, resistance, and and also good areas to kind of add confluence to your trades. Okay, so again, the swing position shows you the expected move for the month. Okay, so for a 4-week time period. Now, the last and final sort of indicator that I use, the last indicator I use is the volume RSI. Now, this volume RSI is a specific one, so let's go to indicators here. And I use volume RSI. And the one I use is by the Peaceful Lizard. Okay, so this is the one that I use. Now, people are always asking me, hey, which one do you use? Which one do you use? This is the one I use, okay? And then I like when I'm trading, I keep it super simple. I keep it really simple. I don't add too much to these things. I don't change any settings. So you just saw my ATR settings. I didn't change anything. I just took off that visual. My EMAs, I just use the 9, 20, 50, 100, and 200. And this is self-created. I don't add anything here. And then if you're in the Discord, I give everybody that script because it also has a VWAP if you want to use VWAP. I don't like using VWAP. But then I also use a volume RSI. So what is the volume RSI? How is it different from the stochastics? So an RSI is a relative strength index, and it's an oscillator. There's two different types of indicators. There's oscillators, which are things that oscillate up and down, move up and down, and they're off of the chart. So notice how this is not on the chart, okay? And then you have things like overlays. What is an overlay? So the ATR is an overlay. The EMAs, they're overlays. Why is it an overlay? Because they're overlaying, they're over the bars. They're on the chart and overlaying on the bars. So two types of indicators, oscillators and overlays. Oscillators are momentum indicators. Okay, they're leading indicators. Now, overlays are typically lagging indicators. You need a lot of past data in order to get these indicators to form. While the oscillators, they show you real-time momentum. Okay, and then the reason I use the volume RSI is because it shows me the momentum of volume. So, is the volume picking up to support longs, or is it dying off to support shorts? That's all I'm looking for. When this is coming down and it's below the 50, it's pretty similar to the stochastics. When it's below the 50, look at that. We're getting a downward shift on the chart. And then when it starts to pick up here, when I see an upward curl, I'm thinking, okay, I'm probably wanting to go long. Okay, probably wanting to go long. All right, and then we get a huge move to the upside. Now we're above the 50, and the way I like to use this is above the 50. If we're holding up there and you see the chart, we're kind of holding on to that 9MA, the pink line. I'm thinking, okay, there's a lot of strength. I'm probably going to, this is probably going to continue in the upward direction unless we get a huge downward curl. Okay. Another thing to look at when you're looking at oscillators is you want to look at divergence, the concept called divergence. And basically what that means is if a stock is moving up on the chart, but then the RSI or your oscillator is starting to move down, then that shows you that it's called bearish divergence, where the stock is going to be expected to come down. But if a stock is coming down and then the volume RSI or your RSI or your MACD, whatever your oscillator, your momentum indicator, whatever you're using, if it starts to come up, but the stock is coming down, then that's called bullish divergence, where the stock is eventually going to pick up pretty quickly. Okay, so those are the three indicators I use. I use the volume RSI, I use these ATRs, and then I use the EMAs. Okay, use the EMAs. Now let's kind of look at how I use this in tandem and how I used it today. Today is December 3rd, 2024. How I used it today to do a call out for the Discord on a day trade. All right, and this comes from just hours of looking at the chart. So it's just like recognizing patterns. All trading is just recognizing patterns. So it's also a mindset. It's a mindset and just recognizing patterns. All right, so early morning. So what I like to do is I'm going to go to so we're day trading, so we're on the 5-minute time frame. I'm going to go to the day setting because I'm day trading. I'm not looking to put on a swing. Okay, so the day setting here. I have my 9, 20, 50, 100, 200, whatever, my EMAs. And then I have my oscillator, okay? I have my oscillator, my momentum indicator. So where does the day start? Okay, where does the day start? The day starts on this first bar here. Make this a little bit bigger so we can see this bad boy. And make this smaller. All right, so the day starts here on this first bar. Okay, this first bar. The first thing I did was I kind of backed out. The day started, we had this huge green bar, okay? So we gapped down. First of all, we gapped down. So that's the first thing I noticed. We gapped down. That looks weird. We gapped down and we had this huge push to the upside. The bar was a huge green bar, but I was like, this bar is lying. This bar is lying. Why do I think it's lying? Because the volume RSI was coming down, showing that there's not enough momentum to push the stock up. So I was like, that's weird. We were hitting the 9MA, rejecting, and then hitting it and rejecting, hitting it and rejecting, the 9 and the 20. And then here are the pieces of confluence that I used to take these shorts, these puts. Number one, my volume RSI was moving down. So that's the first thing I noticed. Volume RSI was coming down. I'm thinking I'm going to go short. Okay, that's number one. Let's get that out the way. So keep in mind, I said volume RSI coming down. That was the first piece of confluence. Number two, I'm using my MAs. The way I like to trade is I wait for a 9, the pink line, the 9MA, to cross above or below the yellow line. In this case, it crossed below. So that is a 920 crossover. 920 crossover. This setup is pretty insane how it works. And I talked about it in a lot of videos, a 920 crossover, okay? So we had a 920 crossover to the downside, showing that recent strength is not as strong, the 9MA, crossing below the 20. What else did we see? We had a massive topside wick here. So this topside wick pretty much shows, remember, topside wicks shows you that sellers are stepping in. So once this bar formed, we know sellers are stepping in. What else did I notice? So so massive topside wick. All right, what else did I notice? All right, topside wick. We're rejecting the 9. So we did a mean reversion. Mean reversion. And rejected the 9 and 20 MA. All right. What else? So already 4 pieces of confluence for downside move. What else? The next thing that I noticed, all right, we're going to do it like this. So the next thing I noticed was we had pretty much a near double top here. And if you watch my videos, you know that one of the best setups that exist is a double top neckline break. Okay. So notice we gap down below this neckline. Okay, let me take these ATRs off real quick. All right, so we had this near double top and we had a neckline. So we have a neckline here. When you break below a neckline, it's called a break of structure. Don't worry about that, but just know, all right, we broke below this neckline. And we tried to push above, but we rejected that. We rejected that neckline, and it's likely to just come down. Now we're below the 9, or below the 20, rejecting that 920. We got the 920 crossover. The volume RSI is coming down. All of this stuff is telling me, holy cannoli, beef ravioli, we're coming down. Okay, we're coming down. All right, what else is going on here? Not only did we break below this neckline, we also, oh, wait, I have to write that down. All right, so we had neckline break. So double top neckline break. What else do we have here? Last but not least, I noticed we had this pretty nice uptrend. Okay, pretty nice uptrend. And we had a break below that trend line and then a retest. Okay, so broke trend line. Now, all of these individually don't mean that, oh, okay, I see a trend line break, let me get in. No, sometimes you get a trend line break and then we pretty much just create a new trend and we continue to the upside. But broke trend line and retested. But using all of these together, we had 6 pieces of confluence for a downside move. Okay, 6 pieces of confluence for a downside move. When you're entering trades, you want to have at least 1 to 2, or not 1 to 2. Holy moly, no. 3 to 4 pieces of confluence for a really good setup, and then 5 to 6 for an A plus, easy money, 100%. It's going in your direction setup. Okay. Last but not least, we also rejected the close of previous day, which is this dark gray line here. Remember these ATRs. Blue line is the call zone, the long zone. Yellow line is the sell zone. We got below that sell zone and absolutely sold off. I actually left in some runners here, and they went pretty stupid. All right. So anyways, so 7 pieces of confluence, rejected close of previous day, which is a key level. And we talked about key levels in another video. Key levels can be highs, lows, closes, opens, EMAs, all that stuff. So key levels are very important. All right, so that's pretty much how I use these indicators. I use the 920 crossover with my EMAs. I use the the ATRs, and I use the ATRs also to set targets. So the first target was that sell ATR, and then the second target would be my the 50% ATR, which is also a key level. And then in terms of the volume RSI, I let it tell me what's the momentum. The momentum looked like it was down, so that's why I entered short. Okay, so all of that. So that's pretty much everything that I use to get into this trade, that I use to get into trades every single day. And I know whenever I take losses, it's because I'm not paying attention to these and I'm just trying to FOMO into something stupid. Okay, if you pay attention to these indicators, these 3 indicators, and you use them like that, let the moving averages show you, hey, what's the average price? Where are we moving? Let the oscillator show you, do we have strength to the downside? Do we have strength to the upside? And then let the ATRs tell you if we're below the yellow, it's likely sells, guys, likely sells. If we're above the blue, likely longs. And then if we're in between, let the other indicators show you, okay, what are we doing? And let those blue, yellow, dark gray lines, let them act as support and resistance. Okay, so hopefully this helps somebody out there. I know someone on TikTok had asked me about how do I use these indicators and what are their settings. So hope you guys enjoyed this video, and I will see you guys next time. It's Mr. Fit to Flourish, your boy. I'm outie. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.